Good evening, everyone. This is Ajit Mishra, and we are back with yet another session of Week Ahead with Religare Technicals. So, just to apprise you all, that in this webinar, we'll talk about the performance, briefly about the past week performance, and followed by what is our view on, the key indices, Nifty and the banking index for the next week. Alongside with some of these, stocks which should be on your radar for the next week, both on the long and short side. So let's get started. And before that, quick disclaimer that whatever we're going to share during the webinar is more of insight and observation that we have regarding the markets. And it should not be considered as a trading or an investment recommendation. So please use your own discretion while you are approaching these ideas. Now talking about markets, so it was a week of consolidation. The indices ended almost on the flat note, and it's not a surprise because last week also we have talked about the same that after a phenomenal surge, like from 15 to 100 to 18,000, it's prudent that market should spend some time around the current levels, and that is what we are seeing. And the most important aspect is that we are seeing this kind of consolidation with the bias on the positive side when the global market, especially the US market, is under tremendous pressure. So that shows kind of a outperformance that we are seeing in the market of late, despite the kind of volatility that we are seeing. So this is something which is positive. Talking about sectors, it's a kind of a mixed trend. IT is the only constant on the negative side. Like this is the third successive week wherein the IT index lost over 3%. This is something which is definitely keeping the market under pressure. Be it IT majors, Infosys, TCS, and the mid-cap IT names. So we are seeing pressure across the board. But at the same time, realty, auto, FMCG, banking, and financials. So these are the sectors which basically helping the index to hold the gains and to sustain the higher levels, hold 17,300 levels in the banking index, in the Nifty index. That we'll talk about in detail in the following slide. So it's a kind of a mixed, basket that we are seeing during this consolidation in the market right now. But amid all, stock specific, sector specific, we are seeing noticeable buying interest across the board and opportunities accordingly. So you can see the list of top 5 gainers and losers from the Nifty basket. So Bajaj Finserv, Tata Consumption, Consumer, ITC, M&M, Asian Paints, all these stocks have done pretty well, like 3% to 6.5%. At the same time, on the losing side, we had, Hindalco, Sri Cement, NP, Reliance, ONGC. So energy basket, two majors like Infosys and Reliance, obviously, they were under pressure. Plus IT major Infosys also, continue to decline for another, week. So now what to expect from the market, from the Nifty and banking index for the next week. So this is the Nifty index. So last week, if you remember that we've talked about is that 17,750 to 17,300 is basically a range. Initially, we saw that market drifted lower below that level also for a day on an intraday basis, but 17,300 we managed to hold, and then we saw very strong recovery in the following session and tested the 17,570 level also. So it's a kind of like both the levels that we've discussed last week, market tested the same. Followed by last 2 trading sessions, we are seeing a very narrow range, today it almost ended on a flat note, almost unchanged. So it's a kind of like a pause around this, upper band of this, broader consolidation pattern that we have been trading in since October. So again, what we are seeing is healthy. Again, what we are seeing in comparison to the global markets, especially the US market, we are still in a very strong position. So that is something we feel positive about. Obviously, there are multiple factors like FIIs are showing interest in our market after a long period of sell-off. So other than that, the domestic factors are also playing favorable role. So all these things put together is helping the index to hold at the high level. Banking and financials, which hold considerable weightage, is doing exceptionally well. So because of that, all these factors, we are seeing that index hovering in a range, but with the bias on the positive side. Now, what to expect next? See, the global clues are still not very conducive, especially the US market. They are still, witnessing decline. And why I'm referring US market time and again is that from the global basket, be it European and other Southeast Asia market, we are largely following the US market for clues. So despite the kind of decline that we have seen in the US market in the recent past, we are still holding strong. So, but it doesn't mean that we can just go on a different way altogether while the global markets are under pressure. So what I'm saying is that we might consolidate further in case if the negativity or a consolidation phase may extend in the US market in days to come. So for that reason, we expect we might spend some more time around the current levels. This could be the broader range, we have shifted this support marginally on a higher side. Earlier we were talking about 17,300, 16,900. Now it's 17,000 to 17,400 on the support side. Upside around 17,800 to 18,000. That's remained the same, 750 to 800. That will continue to act as a resistance. So this broader range of roughly around 1,000 point is what we are anticipating in the for the index in the next week as well. Now comes the banking part. Basically, this is area wherein we are seeing all the action. I would say that market will have more clues in days to come at which side of market we are going to see Nifty approaching from banking index, because as of now what we are seeing is that not only the outperformance but the buoyancy means we are still holding around the highs, unlike the Nifty index wherein we have seen a marginal profit taking. The banking index is still holding around the highs. So this is something which indicates a kind of buying interest across the board, be it PSU names or private banking names. So we are seeing buying interest across the board. But the factor is that we are not seeing decisiveness enough to trigger the next directional move in the Nifty. So what would be the area basically? So 38,800 is something, this previous swing high. This is currently acting as a resistance. So it's not that we have not attempted this zone earlier also. But decisively, I would say that 39,500 ke upar close, that the closing above 39,500 and intraday, even if we surpass this level of 39,800, that would suffice the purpose, and we are going to see a next leg of up move in the banking index, which could help the Nifty to regain strength and surpass the 17,800, 18,000 zone. So this is what we are anticipating, that banking and financial holds the key in the coming week also for the market to outperform. And why we are saying this? Because if we talk about other sectors or stocks which have considerable weightage, stock like IT pack, they are down and out from 3 weeks. We are seeing consistent decline. Reliance holds 11.5 kind of weightage in the index. It's also not showing any kind of support. ITC is also a bit of a lackluster, though it's still holding around the record highs, but we are seeing a lackluster performance. So all these things put together, except banking, we are not seeing any decisiveness on the higher side. So that is why we are vouching more on banking index for the next directional move in the Nifty. So that is the level of around 39,800 is something that you should keep a close watch on. Anything above that would help the Nifty index also to overcome the previous resistance and inch higher. Now, since we are still seeing consolidation in the market for the last couple of weeks, so what to watch out for when it comes to stock? So these are some of the names. First names which comes to our list is Apollo Tyres. So we all know that the kind of traction the auto pack is generating these days, and all the good counters, be it M&M, TVS, Bajaj Auto, Maruti, so except just one or two names like Hero Moto, Tata Motors, they are not performing at par with the others, but the rest of the counter they are doing well. So ancillary space, tire space also should catch up. So Apollo Tyres, we have seen a very major consolidation breakout of late. followed by a week of consolidation or profit taking, and again it is closer to the breakout area. So that offers the comfort to re-enter in case if you fail to buy this stock earlier when we had this breakout. So it's offering an opportunity to re-enter the stock. So this looks strong to us. The stock is trading around the record highs as well. So all the factors put together are indicating that the positive bias may extend further in days to come. The move could be gradual, but the trend looks very decisive. So Apollo Tyres on the long side, you can consider. We are vouching, on banking index for the next direction move in the market. So obviously, how could we miss the banking name? So private banking names, no doubt, ICICI is also trading at the record highs. But we have selected SBI from the PSU pack for obvious reason, because you can see this kind of consolidation that we are seeing in this stock for almost 6-8 months around the record highs. So it's very unlike for the PSU basket, wherein most these stocks are still way below their long-term record highs and 52-week highs. SBI is not only trading at the record highs, but the kind of consolidation that we are seeing in this stock around the record highs, that clearly shows that it's preparing for the next leg of up move. Why? Because this area of consolidation and this last 4-5 weeks of consolidation, we are just seeing a breather before a break. This is what the indications are. So SBI from the PSU basket is something that you can look at next week for the long trades. Now, what if the Nifty breaks 17,400 and approaches towards 17,000 level? Then you should have some stocks on the short side also, or maybe we can look for some pair trading, wherein we buy strong stocks and sell weak stocks. So one such stock that is on our radar from the pharma basket is Oro Pharma. So pharma as a basket is still underperforming. Sun Pharma and Cipla, these are a couple of the names which are holding strong. Otherwise, most of the pharma names, they are witnessing pressure or trading in a downtrend. So Oro Pharma is no exception. We are seeing a clear distribution or maybe a downtrend in a broadening pattern. So of late, we have seen a marginal uptick, but it couldn't sustain, couldn't surpass this level of around 600. And again, we are seeing a gradual decline. So possibility of retesting this lower band or approaching toward the retest the previous swing low around 500 is quite high. So in case if markets offer shorting opportunity, you can consider Oro Pharma for the short trades. Another stock which looked weak to us is Voltas. So you can see the kind of severe fall that the stock had in the past, and now it's hovering in this very narrow band, for almost 2-3 months, and still we have hardly seen any attempt, a decisive attempt, I would say, to regain some strength. So that clearly shows it could be a distribution phase, and we may see further decline in days to come if it breaches this 950 levels on the downside. So Voltas along with the Oro Pharma can be considered for short trades. So just to sum it up, both the indices like Nifty, we are still seeing consolidation, 17,400, 17,000 on the lower side, 17,800 to 18,000 on the higher side is what we are anticipating broadly to consolidate, amid the mixed global clues. But banking looks comparatively stronger. 39,800 is something that you should keep a close eye on. Above that, a decisive move above that could help the index to make the next directional move or regain some strength. But yes, since the other sectors are in a mixed, trend, like IT is still reeling under pressure, some of the index measures like Reliance is not offering the comfort. So all these factors put together, we might see this outperformance from the banking index as a comforting factor that it would cap the downside, even if the global market situation deteriorates further. This is what we are anticipating. But amid all, stocks is offering opportunities on both sides. So Apollo Tyres and SBI on the long side that you can consider. Similarly, Oro Pharma and Voltas on the short side. So yeah, this is all from the presentation part. We'll have a quick poll and then we'll start with the Q&A session. Komal, can we have a quick poll, please? So please quickly respond to this poll so that we can start with the Q&A session. Those who have filled in this feedback, please, you can use that Q&A button in case if you have any question to put those questions across, and stick to your questions to the segment which we have covered, like indices, both key indices, in case you have any doubt about Nifty, banking index, anything, levels you want to talk about, or the stocks that we have just discussed. Individual stock specific queries, please avoid. Any questions, you can put that in the Q&A box. You can use that Q&A button and share your query. All right, so we'll start with the Q&A with Mr. Gopinath's query that how do I expertise in technical analysis for short and long-term trading and investment? So, Mr. Gopinath, it's completely process just like any other analysis process which requires time. Means analyzing for short-term and long-term trading means that you should have a clear agenda in mind while you are approaching to the market, whether you are going for long-term, short-term. If you are, inculcating this technical analysis in your long-term, so the best way, I've discussed this in the previous webinars also, is to use long-term moving averages to start with, to understand, how the trend flows. So the moving average is nothing but the closing or the average of this XYZ period of closing that we take to understand the price. So I can show you this. You can see this green line and red line and Voltas chart also. So that clearly shows that green line is 100 days, exponential moving average is 200 days. So the very long term, the trend is still intact. So that helps you to time your, I won't say time, like rather time your exits. Yes, in a way, time your exits when it comes to long-term investing. And for short-term trading, there's multiple factors that you should keep a close eye on. So to start with, you can just look for several basic books which are available. One book which I can name right now is Technical Analysis from A to Z. So that could be the starting point in case if you want to read more about technical analysis. So Vijender, I've asked for what the targets that we are eyeing in the SBI, till current financial year ending. So as per the pattern, I just stop my screen share and. So see, this consolidation which we have just shared during the webinar is of around 120 points, like 460, 420 is the lower band and upside around 540. So that comes close to around 120, 140 point kind of a upside from the current levels. So that says close to around 680 to 700 is something that we can assume that the SBI can test in next 3 to 6 months. So you should ask a question on the real estate sector. So what is our take on that? So see, we had a very long period of correction in real estate, which lasted, especially when talking about from the market perspective, not from the actual real estate perspective. That almost majority of the major names, they were under consolidation or in a correction for a prolonged period of more than 10 years. And after the breakout last year from that pattern, we had the initial up move, but followed by a marginal decline also. So I would say that we are not seeing a similar kind of traction that we are seeing in the top performing sectors like auto, FMCG, banking, and financials, which are almost at the record highs. But yes, the trend looks positive in comparison to what we are seeing in pharma and IT right now. So if I had to rank, I would rank real estate on third or fourth place after all these top performing sectors. So selectively DLF, overall reality, Godrej property. These are some of the names which looks positive and should be considered when it comes to the real estate sector investment. No stock specific queries, please. Rohit have asked whether we can see further decline in the market due to the hawkish stance from the US Fed. So, Rohit, that is what we've shared during the webinar itself, that despite the negativity which we are seeing in the US markets, our markets are performing very well so far. But yes, in the market, anything can happen. One thing, but indications are not in the favor of such severe decline of 16,000. So in the worst case, the next major support comes closer to around 16,700. That is again the long-term averages that we have on the daily chart. So this is what the worst case scenario so far looks like. But in case the situation changes with time, obviously we'll update during the webinar itself. But this is what at present, this is what the situation is. Okay, next we have Venkata have asked, how do we screen breakout and breakdown stocks? So we have multiple screeners, Venkata, available for free, which you can Google and check. But I strongly won't recommend it just on the basis of breakout or breakdown stock, because these are basically ready-made screeners. So yes, at times you get decent inputs, but you have to refine further. So you'll get a list of stock, and from that list you can select on your own. Means you have to do your own analysis. You can't just select on the basis that this stock has witnessed the breakout from the list, because you will get the list of around 70-80 stock in good days. So you can't trade 70-80 stocks. So stick to the top performing names, stick to the stocks which are highly liquid, in case if you are using those screeners. Okay, so next question is Snehas Kapadia have asked PSU Index. So I'm assuming, Snehas, that you are asking for PSU Banking Index. So yes, we are seeing PSU Index doing well, and otherwise also like the PSU basket is doing well of late for multiple reasons, that whether it's disinvestment, whether the kind of performance that we are seeing some of the PSU's name of late, which were the list of laggards. So except a couple of names like NTPC Coal India, BEL, SCI, we have a long list, the stocks which have done exceptionally well, and the defense basket, HAL, BEL, they are doing well. So overall, and from the PSU basket also, but again, I would say that from PSU banking basket, SBI, Bank of Baroda, Canara Bank. These are like top 3 names which we usually recommend to our clients, even if the market's condition are very conducive. Rest of these stocks, please avoid. Yeah, this is something that Dollar has asked about, why the IT sector is weak, and we have a long-term buy call on forces. So IT sector is weak just because that why the global markets are declining, because the growth outlook might not be that conducive which we were anticipating earlier, and that's the reason, because the IT sector is mainly dependent on the Western nation for their contracts. So in case if there'll be a fear of recession, so that would impact their earning, and that is why we are seeing IT stocks not doing well. But does it mean that this scenario is going to stay there for long? So I doubt, because IT as a sector, I've seen a period of underperformance, but not for a longer period. Means for 6-8 months, there could be a possibility that they might not generate the similar kind of return that we are anticipating from banking, auto, financials, FMCG pack. But sooner or later, we'll not only see this decline subsiding, but also a recovery cycle, or resume the uptrend also. So the idea is, in case if you have made investment for the long term, you can stick to that. And but yeah, fresh buying at current levels is not something that we recommend. Existing positioning you can definitely hold. So Prince Kumar have asked for like power sector and refer to R power. So Prince, R power ke alawa means we have like other stocks. R power is not in the last part of the list also. So the first preference when it comes to this sector is the top performing stocks. So we have NTPC, we have Tata Power, which are doing well, though we are seeing a bit of consolidation in Tata Power, but they are still comparatively stronger. So please avoid stocks which are in fancy for some reason or the other, be it Reliance Power or any other name. Stick to these stocks which are actually strong fundamentally also. So just in case if there be any profit taking in the market, you are not caught on the wrong side of the market. So Rekha Verma, you have asked that why the US market affecting us. So that is what I've been continuously sharing. That's not affecting us yet. It's just a phase that we are seeing a consolidation in the market, which is healthy in comparison to what we have seen in the US market of late. So we are in a very stronger position as of now. Things might change in days to come, but this is not the case right now. So we are definitely in a stronger position. And like attempting this question of like where are we heading next? I feel the best thing for a investor or a trader is to follow the market, not to look for any particular level that that looks very great. In case if we reach to that mark, there's no point in case even if I say that we are inching toward 25,000 levels in the Nifty and we don't participate. The idea is that wherever the trend is, you should just follow that instead of like arguing with market, because we have a view of Nifty, reaching 25,000 mark. I'll only look for long positions and the market turns otherwise, and we are just stuck with a list of long losers. So just follow the markets. You should not bother about how the US markets, in case if you are a trader. If you are an investor, obviously all these macro factors comes into play. But if you are a trader, just follow the trend. A trend says that we are still positive, we are still bullish. No stock specific queries, please. See, Benjamin have asked like how long this market will be volatile. So honestly, I have no answer to this, because this volatility is part and parcel of market, especially when we are consolidating, and we are in that phase right now. So whenever market consolidates, corrects, volatility usually remains high because it unsettles weak hands. Because usually, it's very easy to play when the markets are trending either side, like especially on the positive side. It becomes easy for anybody to, like, just jump in, and next day you come out with the profits. But whenever we see this kind of a range bound consolidation, volatility increases because you are not sure, which side of the market we are going to see next, after the market closes. So it's normal and we can't do much. The one thing which you can do as a trader is to manage your position sizing. Means, in case if you have an appetite for 100 quantity of any XYZ stock, stick to that. Even if the markets are, like, showing you that we are going to see 1,000 point kind of a rally in Nifty, it hardly makes any difference because the markets are here to stay for ages. So it's not that the one day is going to make any changes to your life. Stick to your position sizing, stick to your risk management rules, and this volatility is not going to impact you much. So Rinku have asked about hotel sector. So Rinku, this sector, after a period of prolonged underperformance, we have seen a very strong recovery. Obviously, the pent up demand and the revenge traveling, whatever you can call it. But now one needs to be selective because Indian Hotel, Chalet, Lemon Tree, all these stocks have done exceptionally well, in the recent past. So investment, I would say wait, because we have hardly seen any correction, consolidation. If the view is for long term, let's say 1 year plus, then you can selectively look for options. Short term trading, do maintain very strict stop losses, because in case if there be any profit taking, it could be sharp, because the momentum that we have seen in the sector was very sharp in the recent past. Okay, so fertilizer sector, Mr. Shantu has asked. So yes, we are seeing selective movement in fertilizer and chemical space of late, but the moves are not very decisive enough. Means we are not seeing the sustenance of those up moves, except few names. So I would say that especially when the market like this, wherein the large cap and quality mid caps, they are doing well. Looking for the opportunity, especially if you are looking for short term without having any trend in place, may result in underperformance. So I would say as of now, we are not seeing any major participation except few names like RCF and NFL. I remember that had a decent run, but other than that, mostly counters are either consolidating in a range or witnessing selling pressure. So for a time being, you can avoid both fertilizer and chemical space if the view is short term. IT sector we already talked about. Mr. Vijay have asked for gold. So that you can, Mr. Vijay, ask in our other segment expert for commodities whenever we're going to do that. Or if you're a client associated with us, you can write to us and the concerned team would revert. Again, Rishikesh, same answer to the question. Can we see a 52-week high? Is not going to change my life. Even if we say this, the idea is to participate in that move. So positive bias is here, and this 3-4%, we are away from the record highs. This is something that a market can test, even if in a week time, not for the year end. We have to wait. The idea is to participate. So as of now, 16,700 in the worst case I've talked about, but we have multiple supports before that also, that 17,400, 17,000, and then multiple support around 16,700 zone. So utilize this dips to add quality names, stocks which are still holding around the record highs, sectors which are doing well like auto, banking, financials. Select stocks from the FMCG pack. So this is how you should approach the market. So lastly, we have question from Rekha again that how we can see a GDP of 13.5. A lot of people come with the negative commentary that expectation was 16% plus. So see, if you are an investor, then these things do changes the I would say picture, but not to that extent unless we are seeing a complete revision of the trend that we are in. So as long as we are seeing a recovery, as long as we are seeing growth improving with other factors also in control like inflation and the other challenges like crude coming down, FIs are returning to our markets. So these factors might trigger a knee-jerk reaction, but overall, it's not going to impact even an investor because of late, what I have observed is that all the negativity, like be it the very hawkish stance from the US Fed in the Jackson Hole Symposium, market didn't react so negatively in comparison to what we were anticipating. So all these factors like this high frequency data, be it auto sales or GDP number, quarterly numbers, that might not impact your entire trend unless there's something very decisive, like other factors also going wrong, like inflation being at the higher level and the situation is deteriorating. Like the GST collection number, they are still 1 lakh plus every time we are seeing. So don't worry much about all these numbers or what you are hearing on television around this. The idea is to, in case if you have invested in a group of stock, the rationale means why you have invested should be in place. In case if anything changes from that rationale or anything like dramatically happen on the macro front, then you should look for making changes. Otherwise, you can stick to that position. So Rajesh ji, we have talked about which he has asked about which sector can deliver good returns. So auto FMCG, banking and financial is something that looks very strong to us and should be in your focus. All right, so we have answered all the queries. So thank you everyone for joining in, and we want to see you soon next time, same time this week, next week on Friday. So thank you everyone for joining in. We can conclude the session here.